Last week, President Biden signed an executive order on ensuring responsible innovation in digital assets. Digital assets, in this context, cover various types of assets, including cryptocurrency, stablecoin, and central bank digital currency, also known as CBDC. The executive order outlines key administration objectives concerning the development of U.S. federal policy and regulation for digital assets. Notably, the executive order obligates federal regulatory and executive agencies, including the SEC, FTC, CFTC, Federal Reserve, Treasury, Commerce, FDIC, and OCC, to submit reports and evaluation on various aspects of digital assets administration and regulation over the coming months. For example, within the next 180 days, relevant agencies will submit reports on the implications of developments and adoptions of digital assets and changes in financial market and payment system infrastructures for United States consumers, investors, businesses, and for equitable economic growth. Even before the issuance of the executive order, several federal agencies had already begun taking steps towards establishing digital assets regulation. For example, in January of this year, the Federal Reserve Board released a discussion paper examining the pros and cons of a potential U.S. CBDC. The Federal Reserve Board also solicited public comment on the creation of a U.S. CBDC, including information on CBDC benefits, risks, policy considerations, and overall design. Comments are due in May of this year. Congress is also taking significant action as it relates to the developments of U.S. digital assets policy. On March 17th, the Senate Committee on Banking, Housing, and Urban Affairs will be hosting a full committee hearing on understanding the role of digital assets in illicit finance. Additionally, on March 29th, the U.S. House Committee on Financial Services will be hosting a full committee hearing on assessing the benefits and risks of a U.S. central bank digital currency. Entities in the digital assets sphere and those affected by it will play a critical role in helping the federal government develop digital assets policy and regulation. As stated, the Federal Reserve Board is already soliciting comments on the implementation of a CBDC. Additionally, in response to the executive order and broader regulatory initiatives, Congress and other federal regulatory and executive agencies are likely to solicit significant private sector input as digital assets policy continues to develop. If you have any questions concerning federal agency or congressional action regarding the development of digital assets regulation and policy, please do not hesitate to reach out to me, Stephen Anstey, at sanstey@kilpatricktownsend.com or John Loving at jloving@kilpatricktownsend.com.